Good morning. Picture, if you will, two conversations. The first one is between Trump and Powell, and the second one is between Trump and OPEC plus, including Russia. The first one goes like this. Chair Powell, if you lower rates and inflation is under control, I will do what I can to get oil prices down and keep inflation under control. The second conversation goes like this. Trump to OPEC plus, including Russia. If you lower oil prices, I'll weaken the dollar to help your emerging market economies, and we'll let the price of gold go up to make up for the lower prices in oil. I'll also keep shale oil out of your hair, and I'm not going to sanction your oil anymore. Picture those two conversations. We believe that is what went on behind the scenes. And Trump loves these type of situations. And I believe yesterday's conversation, yesterday's conference, yesterday's outcome of the Fed Open Market Committee was the fruit of that conversation. The bottom line is tariffs and tax cuts have been the sizzle here. Tariffs play to the base, tax cuts play to the base. But cheap energy and a weaker dollar are the stake, just as Jeff Besant has advised. Trump, we think, just got Powell on board last week. And that's a paraphrase of a statement we made January 24th. We're going to get into what happened yesterday presently, or what we call the new Powell-Trump Accord. Let's start with the markets. 10-year yields are down 4 at 420. The dollar is 103.83, up 37. The S&P 500 is 56.57, down 18. The VIX is 2041, up 52. Gold is down 14 at 30.34. Silver is 33.31, down 48. Copper is 506, a little offered under unchanged. WTI is 67.48, up a nickel, up a dime. Natural gas is 427, up a penny and a half. Bitcoin is 85,300, down 1,500. Palladium 949, down 9 and change. Platinum 988, down 7 and change. Gold, silver up at 91 again. That's disconcerting for silver people. Soybeans are 995, down 2. Corn 454, up about 2, and wheat is 566, down almost 3. All right. These are the stories we put out yesterday. Powell signals Trump policy alignment, which is what we're going to elaborate on in much more detail here. Silver report, increasing risks of a short squeeze in London, we put out yesterday. We stand by that. Founders, the casino is open, gold exotic option primer, and a bank, the video version of the silver report. Up top there, it says at noon today, there will be a new post, premium post called Gold Exotic Option Primer. The casino is open. That will be a version of the Founders, a little bit less wonkish, a little bit more easier to read. Okay, there's the home page. Silver report, the mining special, which was well received, and the Goldfix PM post. Here we go. Yesterday was the Fed FOMC. Yesterday's rate decision was no surprise to Fed watchers. However, the Fed's decision to aggressively reduce the amount of bonds it would sell into the market as part of its quantitative tightening program was more unexpected, or at least the size of it was. Taken together, these moves signaled a dovish stance, with Powell acknowledging stagflationary pressures and financial tightness as justification for his actions. But that's not the headline. The real story is Powell's press conference pushback. The key takeaway, what's the next picture? Oh, there you go. We're working on our slides here. The key takeaway from Powell's press conference was his strong pushback against the media's alarmist tone regarding a potential recession and the resurgence of inflation risks. Powell's tone and responses aligned with the Trump administration's policies, signaling that the Fed and the White House, meaning Powell and Trump, are now on the same page. there may not be direct coordination, at least not visibly. That would likely fall under Scott Bessent's arena. However, based on Powell's responses to key economic concerns, it's evident that there is now a working alignment between Trump's administration and Chairman Powell. Evidence. Well, Powell's responses on three major topics indicate this shift. That chart you're looking at there, that's courtesy of Zero Hedge. That's the UMich inflation expectations. And you can see that it has a partisan bent. And we'll talk about that in a second. The three major topics that were discussed during the presser. First was tariffs and inflation. They're kind of the same thing right now. Powell acknowledged that tariffs have an inflationary effect on the economy. He also noted that the Fed accounts for the risk of reciprocal tariffs from other countries in their math. His message was clear. The Fed sees the tariffs, understands their impact, and is not reacting with alarm. The subject of Powell's response, we have the data. We're monitoring it. No need for panic. Recession risk. Powell dismissed the press's increasing concerns about recession as overblown. He stated that the workforce is stable and the economy is on a better track, not necessarily great, but improving compared to what it was under, let's just say, Yellen. He called out the excess of Cassandra-like warnings about a looming downturn. A historical note, when stocks were crashing in 2022, the media ignored recession risks and instead dismissed concerns with the narrative that, quote, talking about a recession creates one. This peaked with the infamous vibecession concept, a claim that negative sentiment, not economic fundamentals, defined recessions. That argument, while interesting, was clearly partisan, or it was framed in a very ideologically partisan way. Fittingly, the left-leaning press is now talking about a recession with no qualms about creating one. Because if you talk about it, you could create one. And gone are the calls for calm and labels such as vibe creation. The hypocrisy and water-carrying behavior among these types is so thick, you can surmise their brain cavities have far more space than the gray matter rattling around inside of it. The reduction in QT should further reduce real recession risks. That's the math that comes out of that, according to him. We'll get into the merits of his argument in a second. Inflation expectations and market stability. That's the third thing. So it was inflation, recession, and actual expectations of inflation. Powell downplayed the University of Michigan inflation survey, calling it an outlier and unreliable. He did not say partisan. We're saying that. Zero Hedge is saying that. It is partisan. Okay? But that's, neither here nor there. It just is. The subtext here is what we're about to get into. It's important. Powell was saying the UMich survey has become more politically biased over the years. Take a look at that. Now, we're not going to say it's not biased. Oh, if there's a Democrat in House, there's going to be high inflation. And then the UMich survey, all the Republicans will say, see, there's going to be high inflation. Well, guess what? There was high inflation. But now look at the hard cross and the slope of sentiment right after Trump gets elected. That's a bullshit indicator now. It may have been a bullshit indicator before, but it's a mountain of bullshit now. Okay, the data shows that inflation concerns in the survey tend to rise when a Republican is in office and decline under a Democrat, even if economic conditions are the same. This aligns with Powell's broader message. Inflation risks are real, but not out of control. The economy is not on the brink of crisis. He did use the word transitory again, so you've got to take that with a grain of salt. But there you have it. The dot plots from the meeting were hawkish. What's the next chart? There we go. The Fed's tone was mixed but strategic. The dot plots from the meeting were hawkish, signaling that the Fed remains aware of inflation risks. However, the QT reduction was very dovish, signaling an easing of financial conditions. So he ain't easing rates, okay, because of inflation. He ain't raising rates because of the economy. He's backing off on QT. So that's the other lever that he has. And plus, he doesn't cave to Trump when he does it that way too, right? Anyway, uh, the press conference itself was neutral to stable, meaning what he said. But Powell's firm pushback against media alarmism suggested that, one, Powell believes he has the situation under control. That remains to be seen, but he's conveying that. Two, QT reduction is effectively a form of QE based on how the market reacted. It's a slow unwinding of previous tightening. And three, or put it this way, it's a slowing down of QE unwinding. They call that a tapering. All right. Three, Powell and Trump, this is our take, are in agreement, implicitly or explicitly, on the broader economic strategy. Trump and Powell are not having a barbecue together. They're not going to parties together. Okay. And Trump may be more ideologically aligned with, Powell